Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and I'm speaking today with Erik Wetterling, founder and editor of thehedgelesshorseman.com. And we'll put a link to the Hedgeless Horseman website down below this interview. Erik, it's always great having you on the show every week just to discuss how you're looking at the junior mining sector, some of the companies that have your attention. And I think it's fair to say for this week that there has been a lot of attention coming into the new year on Hercules Silver, just like there was in the fourth quarter of last year. Now, this stock, Hercules Silver Corp, traded on the TSXV under the ticker BIG, has been on kind of a roller coaster ride. It is initially a silver deposit this company was exploring. They went down at depth and made a big copper discovery, for those that have not been following along. And out of this drill hole they put out last year in the fourth quarter, it really got a lot of investors' attention. I think Hercules Silver was probably the most discussed stock in the junior resource space, especially in the copper space, because of the discovery they made. It also involved bringing in Barrick, which is very unusual for Barrick to come in and take a strategic position after just one hole. But it got a lot of heavy hitters in the industry looking at the stock more seriously because of what it could mean if they've made a true copper supergene discovery at depth underneath the silver. Obviously, the stock went on a wild ride, and then it put out some more holes just this week where it's had a reversal of valuation as far as how people interpreted that. So, Erik, I want to back up the clock and just walk through the process of how you looked at Hercules Silver, because we were discussing this months ago, how you positioned as things rose post news announcement on the first hole, and then how you feel about things now in a general sense after these new holes.
Sure. I mean, as you know, I have been a shareholder of Hercules for quite some time because I was in an early private placement. But back then, it's like the copper side of things that wasn't really in the forefront. So I can't take any credit for having predicted they would hit a hole like that. I was mainly in it for the silver, basically, because almost every other junior has some kind of porphyry target. But then I think a lot changed when they put out that hole. And it's like I often refer back to the Kennerland study. It's like the earlier the results and the better it speaks a lot to the probability that they found something good that could become a significant discovery. Because if you drill 100 holes and have one good hole, that doesn't say much that it's a great system or deposit, because you had 99 tries and then you find one good spot perhaps. But it's like if you put in one hole, especially one hole in a new target, because that's the most extreme version of it, and get such good results this early on. I mean, either you were incredibly lucky, or it simply might be a very robust system that it didn't really matter too much, perhaps, where you actually put the drill hole, because it's, let's say, higher grade all over the place. So, I mean, obviously, and I did a few videos about this, how, almost unique or why it matters, because there's always going to be people who say, well, this copper junior can drill better holes than that. Yeah, that might be true or is true, but still, it's not a lot of juniors that, I mean, they basically targeted the most convenient area to test the 2020 IP anomaly, where they drilled through their silver target and they extended it to the shallower parts of the IP anomaly. So it was a convenient target because they had no idea what was down there. They didn't know what, produced the IP. And when they got those kind of results back, I mean, that was kind of mind-blowing. And obviously, a lot of people start to think that, because after the news release, if I remember correctly, I think it just opened up, I mean, not too much, maybe +4, +8% or something. I might be wrong, but that's my recollection. And I just started buying a lot of shares. And without any more like geological news, really. I mean, it ran up to 1.64, but that was also in between. You had Barrick come in. But the point there is like, without more geological information, but then an added stake by Barrick, which also highlights how incredible it was to have a first hole like that. I mean, it revalued like 100% or more, I think, which in my opinion goes to show that it can take time for the market to value a news release, that it's not efficient, that it revalues everything or fairly prices anything the day after the news release. It takes time, and then of course you get momentum going, and then you get hype building. price goes up, which gets more momentum and increases hype and all of that.
Well, Erik, now that they've put out the new holes, we have more geological information. We have more information to go off of as far as they are still hitting mineralization, copper mineralization. They are still finding nice wide intercepts of it. But I guess it wasn't as exciting as the market was hoping for. And this is pretty typical. We can use this as a case study for any drill play that has put out a hole or maybe even pre-assay has a lot of momentum. After that, sometimes people expect the stars, and even if you land on the moon, it's not far enough into the cosmos for most people to get even more excited. If they had put out something that was eye-popping, this stock actually could have just kept running even higher, but instead we've seen a pretty big correction of, let's just say, 45% over the last week or so. What do you make of the market's reaction to this? Is this a fair reaction? Is this an overreaction?
As always, like, it's impossible to say given that there's so many unknowns still, and this is such early stage. But as you point out, I mean, expectations were high, so we already had the price run up without any more information really. So it's like that's the price to whatever value gap that's getting, narrower and narrower. We don't know if it was, I mean, nobody can say if it was super cheap or super expensive, and nobody on earth knew what the results were going to be. But you have a lot of pent up selling demand, I assume, because it was such a hot stock. And I mean, most of us retail investors are very short term orientated. We're looking for, the next get rich quick catalyst, if you know what I mean. So I think there was a lot of people that they had the, default setting that they were going to sell, hopefully at a profit at the next assay results. Theoretically, you get a, quick 20-30% and you're happy, and then you go and find a new catalyst in another story. So I think a lot of people are going to sell regardless, kinda, and especially the ones who are, again, not long-term orientated. So when you see a kind of a negative reaction like that, I just think there's like everybody that's thinking of selling anyway, they're simply going to sell now, because now if they don't really know or understand the case, they're going to be even more inclined to sell, because there's no paper profits even to get from the news release. And if you, look at the market reaction, it was like, the sky is falling and all of that. So, in my opinion, I think when the price ran up 150%, obviously the risk reward is getting worse by default if there's no new information. And now we have a 45% decrease in price with new information, because this at least was in reaction to a news release. And it's like, what I think, in terms of the context, I'm not a geologist and I haven't seen the core or anything like that, but in my opinion, I find it very hard to kill a target that large, especially since we haven't even seen the IP anomaly or the new IP survey, which, as far as I understand, that was probably a major part why Barrick got interested. I know the CEO has talked about the IP survey as the main thing he's, let's say, dying to share, that really opened their eyes. Would these 3 additional holes kill the entire district? I have a hard time seeing that. And besides, I don't know, but I just assume that since Barrick had people on site, they, I would guess, at least ran an XRF gun across some of the core that we've been seeing here. So it's like, I have no idea if this is even a shock really to management or Barrick, what the grades of these holes were. So I just got to assume that I have a hard time seeing that Barrick put in 23 million for these next 3 holes, if you know what I mean, because it doesn't cost them 23 million to drill these 3 holes. And it's like, in my amateur eyes, I simply have a hard time seeing that the district is killed simply because these 3 holes were like mediocre, because they at least showed copper, etc. And we have no idea what the IP survey will say. Maybe it's going to look obvious. That's like, oh yeah, they stepped out in completely the wrong direction. We have no idea. I don't know what's going to happen if they end up making a significant discovery. If this is a large porphyry deposit, it might be, I don't know, lower grade than we hoped, or there might not be a supergene zone. I don't know that. I just know that from whatever 170 million market cap, the chance of success priced in has gone down. And of course, if they end up making a significant discovery of some kind, there's more upside from 170 million to wherever it could go than from 330 million or whatever it was pre-assay. So I think maybe risk has gone up a bit, but price is down 45%. So it's like, how has the, let's say, risk reward changed? I know I added a bit actually during this dip, but I like always, it's supposed to be asymmetrical. I wouldn't be too surprised if I lost money from here, but if it does end up working out that they, after drilling for $25 million, if they have delineated something, there's probably going to be higher, a higher market cap than 170 million or whatever it is at now.
Yeah, Eric, I think that's a good point, because if you think about where we're at in the process, it is still very early days for any kind of discovery story to only have 4 holes into this yet. And already everybody is a armchair geologist on many of these chat boards. They got to get the potassium area. It's the supergene blanket. It's not the supergene blanket. Everybody's an expert suddenly. I think Barrick's probably a lot better experts than any of us and anybody on any chat forum looking at it. And they saw something that impressed them enough to take a stake. A lot of other people that are very savvy in the junior mining business saw the mineralization and are intrigued, and we're also still constructive on these last couple holes that created the market sell-off. So to your point, they still have $25 million to keep drilling. I think they even have 1 or 2 holes still to release from this early phase of this. And the IP survey, we don't even have that back yet. So it's still very early days. If they put out some holes that are, let's say, in between the first hole and where these recent holes were as far as length and as far as grade, this stock could easily ratchet right back up in between the last 2 valuations, the high point and the low point, or it could start a long run of discovery. A lot of people have been making analogies to other famous explorers and what their charts look like early days and how they ended up resolving, but it could also sell down a lot harder. So how are you going to view the upcoming news? Are you going to just stay in it until you get all that $25 million spent? Will you be reacting to some of the next holes that release? Are you excited about the IP survey before you would take any other action? If somebody is maybe at a loss right now, should they average down? I mean, I know that's a personal question, but would you be, as a poker playing risk reward analyzer, would you be interested in averaging down here, considering all the information we have still to come?
I mean, like always, that comes down to your risk profile and how much you already have, etc. I mean, if you have, maybe you started off with too much and now it's gone down, maybe it is a bit riskier, meaning that, like, okay, if it works out, you're going to make more from this level, but maybe there's, a 10% higher chance that it's going to go south, whatever. So that's impossible for me to answer. I added a bit, but it's always like, this is a high risk, high reward business that you often see people like, in hindsight, like, oh, it was obvious, or, oh, look, I mean, how stupid people were for owning Hercules, whatever. It's like, nobody knows what the results are going to be. Nobody knows how is Hercules going to look in 2 years after, let's say, they drill for 25 million. Nobody can really answer that. The future spectrum of possibilities is very wide. And to your question, what could happen? Like you said, if now this sentiment is reset to the downside, now there's some much more doom and gloom. What if one of the next 2 holes, and that won't make or break, I think, the case either, but the reaction could be quite large to the upside if they all of a sudden, I mean, let's say they drill a hole like the first hole, or it's even better. All of us, everything will change immediately. But let's say the holes are actually mediocre as well, or worse than that. I wouldn't be surprised to see let's say a 30-40% haircut again or something. I'm not saying that's going to happen, but is that a possibility? Yes. And then we have to, again, we have a new price, so a new price for the bet. And then we can think like, well, they still have 25 million left. So maybe, again, we have let's say a disappointing share price reaction. Then we get another disappointing share price reaction, but you still think that, well, now it's trading for whatever, and almost no chance of success is priced in. But I think there is a chance, there's a 15% chance or whatever that this is going to end up being a big discovery, where it's going to look like one after 25 million that has been spent. So all of a sudden, maybe, after that dismal share price reaction, all of a sudden it's, maybe a very good bet, but still the chance of failure could be 80%. So you have to diversify away that risk, obviously, that it's a mathematically great bet theoretically here based on our best guesstimate, but still investing is a marathon, not a sprint. Even if it's the best mathematical bet, if it's a high risk story, you don't want to go all in. I mean, you need to have, I like to have a lot of high risk, high reward stories, but I want enough so that it's like, you can be right 1 in 4 or 1 in 5 or something like that. But even if it's the best mathematical bet, but it's that high, let's say it's high risk, you should never go all in or anything like that, because you can't compound a loss. So you really have to capture the expected value of a portfolio like that. I mean, you have to have like 10 high risk, high reward bets or something, where it's like, one could pay for a lot of them. But my point is that, like, I don't try to predict too much. Like this, for example, I didn't predict we would go down 48% on the day of the news release, but that happened. And then, okay, we think, okay, what do we do here? Do we think the market is still overvaluing this, that it's a bad bet, that it get that bad that you should sell? Or is it actually a better bet all of a sudden after 48% down? So it's like, and what you said, I mean, it could go either way depending on what these next 2 holes, for example, show. And that's still only 2 holes out of, I don't know how many they can drill with 25 million. But it's an ever-changing situation. I look what the market prices it at, but I'm not trying to predict every single news release, not trying to predict every single reaction to said news release, and I don't know what I'm gonna be doing. Let's say this pops up 30% on no news going forward, just, sentiment gets a bit better. By default, that's the price to whatever value gap there theoretically is just got a bit worse. Maybe I'll take some profits. If it drops even more, maybe I'll, price went down, but no change again. Maybe I'll add a bit. So it always depends on what the market prices stuff. And if there's no news release really in between or no new information, it's simply with price going up, that means it's a bit worse risk reward. If price goes down, it's a bit better risk reward, because no matter what people say in the forum or what the sentiment is or what the price is doing, they still have 25 million. That's not going to go away anytime soon. So that's going to produce news releases regardless of what the sentiment of the day is.
Well, Erik, we'll wrap it up here, but it's, I think, a fascinating case study into how sentiment works in the junior mining sector, or really in investing in general. Also, the journey that a stock can go on as a pre-discovery story into a post-discovery story, into a pre-assay risk situation, post-assay result situation, and now, again, pre-assays, as we still have more holes to report, and pre-IP survey. But also, we're in front of a big season of another drill program, maybe even 2 drill programs out of that $25 million. So it's going to be interesting to see how this story evolves, how sentiment swings back and forth, how investors navigate the roller coaster. Do people average down? Do they buy when it's cheap? Did they buy too high? Is it going to go a lot higher? Nobody knows, but it's a fascinating story, and it's the crazy game that we're all in, looking at exploration stories in the resource sector. I appreciate getting your thoughts, how you're looking at it, how you're doing things in your own portfolio. And again, as always, Erik, looking forward to our next conversation.
The same, Shannon, thanks. I remember that I own shares of Hercules Silver, so consider me biased.